Good morning, traders. It is the 10th of October. We are Signal Centre Talking Bull. I'm Joe, joined by uh, Steve O'Hare. Steve, you've got a
Yeah,
lovely
yeah.
colour going on there. Just saw that.
I know. I did all in my power to sort of like dodge the sun all week, but it got me in the end.
Yeah, looking good, mate. Looking refreshed.
Yeah, yeah. Sort of feel it. Liver feels a bit tender.
Liverpool.
Um, yeah, Liverpool feels a bit tender as well. God, dear. Yeah, could easily skip over that. It's sort of a result yesterday that I sort of was half expecting, but then I had a little bit of uh, I don't know. They're not playing well at the moment at all. They look very,
Whatever
very
feeling you had would have
poor.
only lasted 58 seconds anyway, wouldn't it?
No, well, no. The feeling I had was like they'd probably get beat, but uh, there was a little bit of they could surprise them as well. So
Yeah,
Arsenal sort of like looked every time they came forward looked like they're going to score. So
yeah. It's a strange feeling, isn't it, for us Gooners? But
yeah, it's nice. I mean,
it is.
I'm all. There was like a little bit of bittersweet because I sort of thought I want Arsenal to win because I don't want Man City to win the title.
Yeah.
So yeah, I'm sort of supporting Arsenal all the way this year.
Oh,
Apart from
good.
next time they beat Liverpool. I beat Liverpool or play Liverpool. Probably beat
Yeah.
them. Yeah, but yeah, how was it with me? Now the 18 back, mate. Me and you.
Yeah, absolutely. So we've had TAF covering throughout the week. Obviously, we had Jamie's last video last week as well. So, yeah, it's all been good. We've done all right in the gun to the head trades. I mean,
Oh,
obviously,
good.
markets continue to be challenging. And I guess let's take a look at the latest headlines and what's been moving markets over the last 48 hours. So on Friday, it was a non-farm payroll number. And as we were talking about on the video on Friday, it was almost like the markets were hoping for a bad number because at the moment bad news seems to be good news, but the number was quite robust. It increased to 288,000 for September, which was above the consensus forecast of 265, which really then sparked quite a big sell-off in the US equities. The US yields moved higher as well. They dipped following the US employment report on expectations that the Federal Reserve would maintain its hawkish policy stance and avoid any move towards a pivot. We then saw the rate go to above 3.9 before fading slightly. Equities slid, as we know. There is a partial US holiday today, but Wall Street is still open, so we may see a little bit of softening of the markets today. Dollar continued to gain support. Big move to the upside on the back of the US number for the payrolls. Um, no signs of that slowing down. Obviously, generally being viewed as a defensive asset, and money keeps flocking into it, and it traded very close to 10-day highs. In terms of the Canadian unemployment number, that recorded an increase by 21,100 for September after a 39,700 decline the previous month. Ukraine back in focus. I mean, not that it ever went away, but obviously over the weekend there was an explosion on the only road and rail bridge from Russia to Crimea. We had Putin addressing the nation on a Sunday evening, which, according to um, people across the situation, believe that that was quite a rare event for him to do that, and maybe showing signs that he's a bit rattled. He called it an act of terrorism and blamed Ukraine with the reaction on Monday. Watched that. Obviously, the world's watching that very closely, and there've already been missile attacks today. So, obviously, not great stuff. And thoughts and prayers with the people impacted by that situation on a daily basis. So, bit of a malaise in the markets today, it would seem. Should we take a look at some markets, Steve, and see what's lining up? Have you had much chance to keep an eye on
Um,
things?
I've had a little look over the last few days. So let me just share my screen and I'll get to um, Bitcoin. Can you see my Bitcoin chart? Okay.
I can see the TradingView stream.
Let me just present the right screen then.
If anybody wants to get involved today, please feel free to do so. We will do our best to cover as many markets as we can, but if we don't cover anything that you are looking at or trading, please feel free to post up on the live chat and we'll do our best to cover it.
Yeah, so we'll take a look at the Bitcoin on the weekly chart. Again, we're still holding around the support level. This is 17,600 up to 20,000. If we look at the actual candles in a little bit more detail, they're looking slightly positive on the weekly chart. We had a bullish hammer here, inverted hammer, which is bullish, and another inverted hammer. So maybe signs that it is trying to form a bit of a base around this green area of support that we've got here. But the jury's still out. We still have to really sort of like recapture ground. In my eyes, we have to really get back above 29,000 before this bearish move lower, in my eyes, has stalled. Even a break above 25,250 would be positive. That would form basically a double bottom formation. So really, that's one key level to look out for. Otherwise, if we look down at the shorter term charts, it's looking like this is a 4-hour chart. Really sort of like range bound between the 18,000 and the 20,500. And yeah, over the last, say, 2 or 3 days, it's just been sideways, really looking for that next break or next move. So watching that very carefully. XRP continues to outperform. The weekly chart was pretty decent last week, a bullish engulfing candle. We need really to get above the 56 level, which was a inverse head and shoulders measured move target, and but above there 60 cents would be a 50% retracement of the downward move from March. 61.8 resistance comes in at 67.33. So XRP continuing to outperform over on the cryptocurrencies. Drilling down to commodities, take a look at those. Obviously, these will be impacted by the events, Russia, Ukraine, etc. And gold has continued the move lower. We've got this bearish channel that I had drawn. We can extend it now sort of further, and it really sort of resistance really held quite well. 1735 was resistance, stalled in front of there, posted the hanging man candle on the daily chart, you can see here, and then we've had 3 negative days of price action. Today we've seen some follow through to the downside as well. Low so far today is around 1685, the high of 1700. And yeah, we're doing the same. We're holding around this supportive area, but continue in this bearish channel. So any sort of real escalation in any sort of conflict, this normally lends a supportive hand to gold. However, the dollar seems to be the safe haven asset of the day at the moment. That continues to drive higher, which puts gold under pressure. So a little bit of a double whammy there. Looking at maybe a shorter term chart on here, we can look at the 4-hour chart and we can see like a double top formation formed. The break of 1700 opens up a measured move to somewhere around about 1670, I would imagine. Yeah, 1673 is the measured move target of that, which takes us back into this buying, selling supportive area here. So looking at 1670, further downside on gold. Looking at crude oil, over the last week, we've seen monster spike higher, really, and this has formed a morning doji star formation. So let me just get rid of a few of these lines so it doesn't look so confusing.
So it was OPEC cutting production, right? Just in case you missed that.
Oh yeah, no, actually, it's sort of like that seemed to trickle into the mainstream news, and to obviously there's a lot of oohing and ahhing going on. OPEC plus nations cut. Is it 2 million barrels a day they cut by instead of
Yeah.
the expected?
So basically, it's on the basis that they believed that the overall market economies would start to suffer, and therefore they were sort of holding back because they believe that the demand for oil will eventually wane.
Well,
so
they
they're
definitely
trying
will
to get
suffer.
in front of it.
Yeah, definitely will suffer with the price of oil moving that much higher. So it is a bit of a again, there's a two-way effect there, and that's not looking very good in terms of heating bills, etc. But that's just something that the world has got to deal with, and the OPEC plus nations look like it feels like they're siding on with Russia in terms of sort of restricting that oil supply. Russia doing it for a different reason, although the Americans have lent a hand in that as well, because obviously Nord Stream 2 pipeline, the reason whoever blew that up, no one really knows yet, but there's a lot of fingers pointing at America, that because they threatened to do it earlier in the year. Biden threatened to do it. So all quite interesting, and leading to an impact on the supply of oil, and that has resulted in the move higher. Next resistance level on the WTI crude oil doesn't come in till around about 97.50. That would be pretty significant. A break above there would be the highest levels we've seen since the start of August, and obviously we're approaching the winter time. It all feels a bit chilly here in the UK. But have we seen a nice ABC, overextended ABC correction, ready for the next move higher? Still a lot to play out before we really get into that. On the daily chart, we can see that we rallied to 92.14, which was a previous swing low and quite a key pivotal area. We can see historically we've found this level tough either way to break above or below. So further upside looks like the potential there after the last the whole week that we saw last week, the positive week we saw last week. Brent crude oil, the levels to watch here are slightly different, trading at a premium of around about $6, or yeah, probably about $5 actually. $5.50 it's trading above 98.04. That's where we got up to, or just short of that, 98.00. And the next resistance level really coming in around about 103.30 in Brent crude oil. So really looking to buy dips in that at this present moment in time. We can see on the 4-hour chart that we've got a nice corrective channel formation going on. Natural gas, that has really sort of like not been impacted too badly by what's gone on last week, and we're in we've seen 6 negative weeks of price action after forming the evening doji star formation at the previous swing high, June's swing high, and yeah, it's found a little bit of support down at the 640 level, further support coming in at 530, resistance really 730, a break above 730, and we may see this correction extending. We've had a couple of doji candles over the last couple of weeks, so we looking out for that. On the daily chart, we were looking at a head and shoulders formation, and didn't quite get down to the measured move target, which was about 560, but 640 was quite a decent move lower from that technical formation. So yeah, maybe you can show us how the dollar's getting on, Joe, because I've missed the dollar.
Yeah, well, you haven't missed anything really. Still very much going up, as we can see here. It's continues to trade in a bullish uptrend. We saw this pullback over the last couple of weeks really, but we then got this big bullish engulfing candle form on the 5th of October, and prices have continued to move to the upside ever since. So that just appears to be a nice retest of newly formed support at around 110.22. Buyers have stepped in, and then we've seen 3 consecutive days of gains. We are mildly higher today. As mentioned, it is a partial holiday in the US today. The Wall Street markets, S&P, NASDAQ will remain open. I think it's the bond markets that are shut. Is that generally the way it goes, Steve, on these partial holidays?
Yeah.
So yeah, looking set really to go and challenge these previous highs again that we posted on the 28th of September up at 114.78. And I think if we can overcome that, then we're targeting this move into 116.76. Let's just go to a longer term chart to see when that level was last relevant. We're going back to a low that we've got there from the 1st of March 2002, and then we're going for the highs seen in 2001 up at 121.02. So no signs of this slowing down at all at the minute. Continues to be good demand for the US dollar, and I imagine that is being stoked by fears in the market and basically looking to find a home, a safe home for capital. And the dollar index is the number one asset for that at the moment. So obviously having a knock-on impact on everything else. Looking at euro US dollar, we did see a decent bounce from the lows around 95.95. The rally stalled around parity. It got, I think, within a tick of hitting parity on the 4th of October before being repelled just in front of the bearish channel as well. Really quite a tight channel that we have here on the daily chart going back to February earlier this year. No signs of it exiting that, and in fact it looks like we're going to go on to retest these lows that we posted on the 28th. So yeah, still looking pretty bearish across the board there. Looking at cable, we can see that we had this big reaction to the upside following the Bank of England stepping in to try and stabilise prices. Decent rally to the upside, but appears to have stalled now at around 114.50. And the sellers have stepped back in to drive this lower. Still trading in a downtrend, as we can see. And it looks as though we are maybe going to see a move back towards some of these lows that we posted late September. I mean, that's still quite a significant move that will be required percentage-wise. What is that down to those lows? We're still 6.7% off of the lows that we posted on that day there on the Monday, the 26th of September. So, yeah, it doesn't look particularly healthy at all. Looking at some of the other majors, we can take a look at the Aussie versus the US dollar. We've got a question actually about sterling Oz, which I'll take a look at in a moment, but this is breaking down to new lows. It's taken out the low that we posted here on the 28th of September. Done that this morning, looking pretty sick indeed. No signs of that reversing. Obviously, we've got commodities that are heavily linked to the Aussie price. And the US dollar is just trouncing everything at the minute, and we're seeing fresh lows here. In terms of when we saw the lowest or the last drop to this level, it was back at the height of the pandemic by the looks of things. Yes, you have to go back to April 2020 since we were last recording prices at these levels. In terms of fib levels, we've got 78.6 down at 60.41. That for me would be the target to look for on the downside to potentially stall prices. Let's take a look at New Zealand dollar versus US dollar, something similar going on there, although we are pretty much coming close to the lows that we posted at the height of the pandemic there. Fast approaching 54.69. Big reversal on the weekly chart last week. We saw a decent move to the upside, but then posted what looks to be a bit of a gravestone looking doji, really not very healthy at all. Yeah, not looking great. In terms of sterling Oz, somebody asked about this. So we've got a situation where sterling is looking sort of okay at the minute following this intervention from the Bank of England. But if we look at the Aussie as we saw against the US dollar, that was making fresh lows. So really a bit of a battle of the weak currencies at the minute, and it appears that sterling's winning this one for now. We saw this big reaction higher following the Bank of England stepping in from 159.17. We've broken up through a short-term resistance at 172.15, and now we are approaching resistance at 178.57. So it'll be interesting to see what sort of reaction we get there, if any. At the moment, it looks to be on the front foot. So if you were trading that, I think the bias has to be to the upside, but you've got to be quite cute with where you place your stops on this one. We are fast approaching resistance, so if you're going to target these levels, you want to make sure that your risk-reward profile of your trade setups is still better than 2-to-1 if you can work that out with stops. So yeah, not looking too good for the Aussie dollar at the minute as things stand. Let's move on to the indices. So Collins on TradingViews just asked, sorry, on YouTube just asked about Euro US dollar. We have just covered that, so hopefully you caught that. If not, you'll have to replay the video today. Okay, let's take a look at the indices. So let's go to the ASX 200. We saw this big move to the upside last week, but then we're starting to cool off a little bit. We gapped lower overnight and posting some gains from those lows that we posted, trying to fill that gap. Be interesting to see what sort of reaction we get from there. Taking a look at the European markets, the DAX rallied back through this resistance at 12,431, but now is back below it as we closed the week pretty negatively following quite a positive start. Interesting to see if we can get any kind of bullish momentum start to form here. I think we need to take out this resistance that we formed on Thursday at 12,704 before we can get too excited about a higher correction on that market. Eurostoxx 50, that's still trading below this major resistance here at 33.85. We shot above it last week, but then just sunk throughout the rest of the week to close below it. Looking at the US markets, Nasdaq still flirting with this major level of support at 11,035. We made a swing low here on the 3rd of October at 10,829. We're pretty close to it at the minute. So if we can get any kind of bullish momentum here, if we can start to see any participants diving back in the hope that we're going to get a bounce, then maybe we'll start to see a correction to the upside. But overall, the trend still remains bearish, and therefore the bias remains bearish, certainly from a trading perspective. But while you're into these sort of major levels of support, from a risk reward perspective, it does favor maybe some speculative buys, but they are just that. You will need to be very careful, because if we start to break down through these lows here, then the chances are the prices are going to continue to move to the downside. S&P 500, similar situation to the Nasdaq. We are flirting with these lows. We've got a major support now at 3,559. If that gives way, we're straight into a 50% fib at 3,500. And then we've got the measured move of this head and shoulders top pattern coming in at 3,396. So still expecting lower prices there. But again, from a risk reward perspective, looking from a purely a speculative basis, if we do hold on to these swing lows, then maybe there'll be some dip buyers that will be trying to take advantage of that in the very short term. FTSE 100 still holding this massive level of support around 6822 to 6842. On a number of occasions now, we've seen a test of this level, and it's resulted in quite a decent bounce to the upside. We stalled last week, hitting highs of 7106 before the sellers stepped in to drag prices lower. Looking very choppy at the moment. As long as this 6822 level holds, then I think there is still scope for a bounce to the upside. But if that level starts to break down, then I think we're in all sorts of bother and looking for much lower prices on the FTSE 100 over the short to medium term. That's it on the indices. Unless there's anything you want to mention, Steve?
Looks good to me, mate.
Lovely. Okay, so going to the head trades then. We can move on now to that. So this is where all of us pick trade ideas on the video. They are highly speculative. We're just coming up with them pretty much on the fly. Each of the ideas must have stops and targets. They're all placed at market, and the ideas expire at 9 p.m. UK time, or when the stops or the targets are hit. So TAF went with natural gas on Friday, and he was slightly offside. He was down by 0.61 R on that. I was selling cable, looked to be forming, well, maybe a bit of a flag or a bearish pennant on the intraday chart. So I tried to take advantage of that. It was non-farm payrolls as well, so it was quite choppy. However, managed to hold on to a 1.07 R win on that on Friday. So that will do. Overall, let's just take a quick look at where we are. We're over 700 episodes now, Steve. Did you catch that while you was away?
Yeah.
So overall, bit choppy in the last few sessions, still sort of hanging around these sort of key highs that we've made on our balance. So we started off with £1,000 and we risked 1% on every single trade that we've done. And it's been pretty successful so far, but it has gone through quite a long period of not going anywhere really. But in recent weeks, it's been quite kind to us. I think the increase in volatility has been a good thing. And let's see if we can pick another couple of winners today. Steve, have you got anything ready?
I sort of have, just really sort of like firing through, and that the one that looks slightly positive for me is these inverted hammers after the bullish hammer on Bitcoin USD. So we can see that over the last few hours, could we potentially be forming a inverse head and shoulders? Not 100% sure on this, but this is a sort of formation that I like to look for. Neckline would come in around about the 19,600 level, and also we've just formed what looks like a morning doji star formation here. So looks quite ripe for that, and we can approach this with quite a decent risk reward on the downside. So like if we 329, that sort of gives us about a 1,000 point stop, and maybe look for a ooh, is that too much? Let me see. Coming back with a bit of a punchy one, 4-to-1 risk reward on here. I'm looking to target, if we do manage to break the neckline, the measured move target will be, let's measure it out, say somewhere like that, extend it higher. So the measured move target will somewhere be close to about 20,000. So I'm getting long of Bitcoin here, 90,439, stop, well, 100 points slower, 90,339. And targeting a move to 90,839. That's me, 4-to-1 risk reward.
Like that. Good luck. Okay, I'm taking a look at a currency today. So just had a little flick through my watch list on the right hand side and didn't have to go far before I found something that I quite liked, and it was Canadian dollar versus Swiss franc. Not the most popular traded currency pair out there, but one that looks to be doing okay from a technical perspective. So this is the daily chart to start with. We've got a major area of support here that we can see on the daily chart that's done a pretty decent job. Last week, we saw a big green candle form on the Monday. We saw a little bit of a pullback throughout the week, but now look to be pushing again to the upside. So from a risk reward perspective, I like the fact that it's holding these major levels of support, and we've seen a decent reaction from that. So hoping for a continuation to the upside. If we take a look at the intraday charts, we can see maybe a bullish flag forming here on the intraday setup. So we've seen a decent break from that over the last 27 minutes. If we can hold on to that, then that would confirm the completion of that pattern. So I'm going to try and buy that now at a price of 72.46. I'm going with a stop loss just below the swing low that we posted at 7 o'clock, which is at 72.25, and targeting a move into this resistance level here at 72.91, giving me a risk reward ratio of 2.1 R. So yeah, quite happy with that. Let's see how that plays out between now and 9 o'clock UK time. Rare Lizard on TradingView asking how the challenge works. Just to reiterate, with this, we pick a trade idea live on the video as if we've got a gun to our head. So we don't get a lot of time to think about it. We're just picking ideas that we think have got the potential to play out between now and 9 p.m. UK time when we close the trades off, regardless of the outcome. Of course, if we hit the stop or the target in the meantime, then the trades will be closed out as well. They're all placed at market and they all have stops and targets, and they'll be published to our TradingView profile, which you can find at signal_center. Okay, let's look at what's in store for the day ahead. So not an awful lot today due to the fact that we've got this partial holiday in the US. At 6:35 UK time, we have Fed Governor Brainard speaking. Of course, any time that we see these Fed governors speaking, it is an event at the moment because they're all being questioned on monetary policy. Very much been hawkish of late, and no signs of them pivoting towards lowering rates or adding any sort of stimulus to the market. So for the time being, they are taking quite a hard line with this hawkish approach, and that is impacting markets certainly at the minute. Tomorrow morning, we've got UK labour market numbers. That's at 7 a.m. UK time, so prior to us coming on the stream tomorrow. And then throughout the rest of the week, we've got Federal Reserve minutes on Wednesday, the 12th. We've got US consumer prices on Thursday. Obviously, the latest read on inflation in the US, which will be very important. And then we also have the US retail sales number. So a couple of bits to keep us interested, not an awful lot on the calendar side of things or from a macroeconomic perspective, but still plenty going on in the world that is likely to create significant volatility across all asset classes. So, Steve, I think that's it from us. We seem to wrap this up within 30 minutes, which is good.
Yeah, that is good, mate. I think a few more of those work. So yeah, I think we could. Yeah, decent coverage. As Joe said, you know, if you want us to cover markets that we don't normally cover, let us know live on air, and we'll take a look at them. So
Perfect.
Yeah,
Excellent. Okay, have a great day, everybody, and we'll be back tomorrow morning.
cheers.
Bye-bye.